Check, check. Okay. Niraj, how you doing, my friend? Good to see you. Can you hear me? You should be able to hear me, right? Give me a thumbs up if you guys can hear me in chat. We're just hanging out today. No intro, no all that stuff. I am getting the music started here. All right, let me know if you guys can hear me good. What's up? What's up? What's up? Gotta post the notification, or I gotta reach out. Make sure. Rumbles, how you doing, my friend? Good to see you. It's been a very long time. I haven't seen that name in a while. How you doing? What's new? How's life treating you? Are you trading? How are your trades going? I have a lot of questions. Niraj, okay, you guys can hear me, cool. Let me just go out and get send the notifications out, so just bear with me. How do you guys like the thumbnail? I love the thumbnail of this video. All right, let's go ahead and do. Hold on. My Discord. Okay, let's see. Thank you for remembering me. Of course, my friend. Of course, I do my best to try to remember as many of my followers as possible. Right now, luckily, the channel's kind of small to where it's a lot easier. But if it does end up getting to a larger point, I figured it's nice to remember all those who were here from the beginning, and me, everyone else, of course. But I can only remember so much. Let me just. Thumbnail is stick, dude. Thank you. Thank you. I just looked up Jerome Powell memes, and that was the first one that caught my eye. That's what we're rolling with. I think it's good. Funny. How you guys doing? I haven't checked out anything. Let's see. I hope it gets big one day. Me too. Me too. Johnny, if we get good news, I'm planning a long from 29,372. Can we consider that long? Yeah, you can consider that. I'm not taking it, but you can consider it. Let's see. Fun miner, 30 or 28K from here. Me personally, I think 38K. 38. I think 28K. But we'll have to see how it reacts. I personally think 28K. Magic Man 69, how you doing, my friend? Good to see you, as always. What was the... Hold on, let me get music on my end here, because I know you guys can hear yours, and if you guys need me to change it, let me know, just because I'm listening separately on my headphones. So just let me know if you want me to change a song, or if you can't hear it, or if there's any audio issues. All right. Alif, what's up, ABC fam? Nice thumbnail, Johnny. I appreciate it. I thought it was funny. That was good. Everything is sick, man. Awesome, awesome. You helped me in my initial days. Are you still trading though? If you are, what strategy are you using? I'm curious. And how is that going for you? I have a question. Can I ask? Absolutely, Rumbles. Absolutely. Ask any question you might have. Let me drink some water. All right, let me. So what was the? Does anybody know the actual announcement they made? Like, what was the? Did they raise it to 0.25? All right, they did raise it. Oh, if the Fed Reserve. Okay, no, hold on. Does anybody know? I'm not trading yet, but I'm learning order flow. Okay. I personally, I think you should. If you understand the basics, sure. I think it's something to keep in mind and use, and if you want to learn it, absolutely, there's nothing wrong with that. But got in on some Caspa mining NFTs, bullish on Caspa. Check the chart, please. Absolutely. Let's see. Prime to take ABC long on LTC. I will take a look at that here, Magic Man. Do you just trade, or do you do anything else? What, for like to make money wise? Or just like in general? I have hobbies, but to make money, a lot of what I do is crypto related. So the trading itself, I make like literally it's nothing crazy. I make a little bit off of talking about Fairdesk, and I make a little bit off commission, so that kind of helps pay the bills. I also make money for you guys signing up for the Discord and the memberships off there, so I made a decent amount of money off of that. I've at the moment, but I really don't do anything besides that. I'm at a point to where I'm just scraping by, or I'm doing that on purpose. Like, I'm making money, I'm accumulating, but I'm taking some money out to pay for bills, whatever I don't make from YouTube or online Discords, etc. Any what I just talked about. At some point, I'm trying to think of how to say this. I know, like, if you look at Kite goes out, makes money every day from door dashing. I'm considering doing the same again, but maybe not door dashing. I'm considering doing something on the side, because at the moment I would like to start accumulating more money, just to sort of be able to put more money into invested things. So at the moment, this is all I do, but that is subject to change. I want to see, what was the actual... Where could I find what the actual decision was? Let me know where I can find where the actual data came out onto. Let's see. Well, if it isn't Johnny Powell. Happy Wednesday. Good to see you, Joe. How you doing? Why don't you try prop firms? That's actually a great question. I have tried prop firms in the past. The biggest problem I have with prop firms is that they create the rules, and the rule sets. All right, there's two main problems I have with it. One is they create rule sets in order to benefit the company and basically make it harder for you to win. They implement drawdown rates. I mean, in some ways, it's actually, prop firms can be helpful because it kind of forces you to work with the rules that they have and kind of force you to use good risk management. So I think in that aspect, it's good. But guys, hold on, before I continue, let me know where I can find where they did this. Am I on the wrong website? Let me know where I can find where they actually released the information. Is this it? Was that on the right page? But anyway, so they make rule sets that basically kind of go against you right off the bat. Some of them implement daily, like they force you to trade every day, which is something I don't believe in. I believe when the opportunities come, you can take them, but trying to go out and actively search for trading day or trading opportunities every day is not the best practice. But they basically kind of force you to trade even when you don't want to find the right setups or when you don't find the best setups. That's my biggest problem. Number two is I am still, if you guys can find this is open to anyone, right? If you guys can find a prop firm that's perhaps based off of a actual crypto exchange instead of MT4 or MT5, because the problem with MT4, MT5 and all these brokers that use them is what's the name of it? Some of the spreads are expensive, and also what is it? I forgot the name of it, but they have a version of funding. So basically, I forgot the name of it. Whatever their version of funding rate is, so they have their own version of funding rate. It is 10 to 15 times more expensive than any crypto exchange you can trade on. So if you want to hold trades, especially over the course of multiple days, weeks, it's going to cost you 10 to 15 times more to hold a trade. I was holding a short from, I think, up here for a while. I didn't get stopped out. I had a larger stop loss. I was experimenting. I had something crazy. I had like a 3.5%, 4%, nothing that much, right? And basically what would happen is I was stuck in this range. By the time we actually came back down before pumping up, I paid like twice the amount. Or actually, not twice the amount. I would say I paid about, I think it was up like $30 to $35 in funding in the course of like 2 weeks. That's ridiculous. That is absolutely ridiculous. So if anyone can find me a prop firm that doesn't have ridiculous funding rates, that's reasonable, even if it's double what Bybit is, I'll pay that. That's fine. But the 10 to 15 times the amount, that's absolutely ridiculous. To pay to hold positions, that is stupid. So that's my biggest gripe with prop firms is the rules you can kind of get around. But the actual funding rate of some of these prop firms and how I do things, I hold trades for long periods of time. They will eat you alive. The funding will eat you alive with prop firms. CME Fed Watch tool. Thank you, Illuminating Nothing. Okay, thank you for that. Starting OnlyFans, I'll leave. I effing hate MT4 and MT5. What prop firm are you talking about? I've tried. Hold on, I gotta find it. I've tried this one. Now I'm not gonna, I don't want to sit here and bash anything, but I've tried Crypto Fund Trader. This was recommended to me. I tried it. This is one of them that was charging ridiculous amount in funding. So as the whole trades, you get eaten alive. There's another one I tried. I gotta find it. Funding rates are only for crypto on, or is it 4x2? It's 4x2. So if you're using a broker, it's all across all positions. The funding rates may be different, but from what I've seen, why isn't this loading? All right, so let's see. Okay. All right, so if we go over 550, that's going to be bad. Everyone's expecting around 525 to 550. Okay. All right, let's pull up. The meeting's gonna get started here any minute. I'm gonna pull it up here. Let's see. Oh, it's at 2:30? I thought the meeting started at 2. Ah. It looks like we're gonna be hanging out here for a while. Where is... So the funded trader had... This one had like there was like I got a discount code. So I was able to try one of these very cheap. Same thing. Let's see. Have you tried Funded Engineer? I have not tried that. But let's see. So the best way to figure out is figure out what kind of brokers they use. And then something they'll never tell you is, like, they'll have leverage and stuff, but they will never tell you. They'll never tell you, like, how much the... I've never seen this one before. Yeah, see, they allow weekend holdings, but I wonder how much they charge for you to have weekend holding, or how much you would charge to have it hold over the weekend, because they charge you for that. How much is it? Holy crap, $2,000 for $500,000? Damn. Yeah, it really depends on the broker they use, but I can promise you that I forgot the name of it. Swap fees. That's what it is. Swap fees. So yeah, interest that the traders pay for maintaining a position until the end of trading day. Right. So this is swap fees. So swap fees are applied across the board, regardless of what broker or what platform you use. The swap fees are absolutely ridiculous. There's so much more money than that. You're paying so much more than you would be paying for funding on like a typical crypto exchange. If you guys can find something that has very small swap fees, I'll actually consider it. Because let's see, because I've had, sorry, I can't speak. because I had a friend trading with prop firm, and he is a swing trader, and he is making good amount of money. Well, what do you consider a swing trader though? Is a swing trader a couple days? Remember, we hold positions for weeks sometimes. I've been in this trade. I got stopped out. I've been in this trade since this long trade since June 16th. So we've been in for over a month. So it really depends on what you consider swing trading. But Arius, hey everyone, sorry for being late. No worries, my friend. No worries. I thought everything was going to happen at 2, but it turns out the news. Let's check the news. All right, so apparently it's... Let me refresh. I think they just did a 0.25 increase. From what I've been seeing. Okay, yeah, 0.25. Or sorry, 25 basis points. All right, so it is 0.25. We just gotta wait for Jerome Powell to speak. Rumples, can you do me a favor? Can you ask him like how long he holds his trades for and what he pays in swap fees? Let me know. I'm being serious. And if it's good enough, I'll actually consider it. Because besides that, I think prop firms can be a good way to leverage more money. And if you're using proper risk management, as long as you're following the rules and the company that you're using isn't trying to screw you, which a lot of them are, but a lot of them are banking on you to trade every day. They're banking on you to be more active. And the more active you are in the market, the more likely you are to fail. Please ask him and let me know. DM me in my Discord. If you don't have my Discord, let me know. I'll give it to you. Let's see. 2 p.m. FOMC meeting, 2-day meeting. AutoCAD. Jerome Powell's. So the announcement, the interest rate announcement was at 2 p.m. and then the meeting's gonna be at 2:30. I'll check YouTube again, but I just checked. Yeah, so if I search it, 2:30, 2:30, 2:30. So it looks like the actual meeting, where Jerome Powell speaks, is gonna be at 2:30. Sky Knight W thumbnail. I figured you guys will like that. It's pretty good. It's pretty funny. I literally just Googled Jerome Powell memes, and that was the first one that stuck out. I think my Forex fund doesn't require swap fees. I'll look into that. Should have done 0.5 and dumped the market. Imagine that. Imagine that, Sky Knight. I think that'd be hilarious. All right, so we got about 23 minutes until Jerome Powell speaks. We'll have to wait and see what happens. I gotta sleep. See you later. Thank you so much for stopping by, my friend. Hope you have a good night. Good night's sleep. Hope to catch you soon. Good seeing you again as always. Be good, be safe. Oh, Caspa. Yes, sorry about that. Sorry about that, Alif. I'm sorry. Yo. What happens when the Fed raises interest rates? Usually, I mean, if it's as expected, if it's basically going, if everyone's expecting 0.25 and we get 0.25, nothing serious is going to happen. But if we get a larger interest rate spike than everyone's expecting, then yeah, it's going to have a overall larger effect on the market. But to me, in my opinion, it doesn't really, it does help kind of actually help the markets move, but I don't think it's anything significant unless it's going against what majority of people are thinking. Let me know. Let me know, Alif, what's the best exchange for this? Is it CoinEx? Because this is the best one that I've seen. If you can find anything better, let me know. But for Caspa, I mean, you do have a short ABC coming up. I cannot deny this. So let me know if there's anything better. Sorry, I just need to move my chat. Here we go. It's a lot better. But so there's a possible short setup on Caspa coming up. So you would need a significant break in the actual trend itself. A significant break at the high. If we put in some sort of false top, you know, get something like this. That's going to be a possible rejection. All right, I will ask him, add me on Discord. Rumples, if you, I don't know if you're asleep, but you need to give me your username. Or you need, is it just Rumples? I'll figure out from him later. Let's see. But yeah, if I go zoom in a little bit more, Leaf. I mean, it looks like a completed ABC here. There's an ABC within the C. Are you shorting or are you buying this? You said you were buying NFTs, so you were bullish on this, right? Let me know if I'm wrong. I mean, right now, there's nothing significant until we either break the high or if we come back down below, run that pivot around 0.28, and then we can go ahead and mine and cast with NFTs. Okay, I got you. I got you. All right, so check DXY and SMP. Yeah, let's do that. But Alif, I really don't have anything else besides that. All right, SMP is still kind of up there, so we need to test about 462 as the previous local high as a resistance. To be honest, we can, if we put in a new all-time high and we don't get a significant pump, if we just get a slight wick higher and a rejection, I've told you this many times, this is very scary. I do not like this. I do not like this one bit. So we'll just get a continuation higher and just keep trucking. But if we do not and we just get a slight wick, we could have a repeat of 2008. I hate to break it to you guys, but 2008 is in the cards. What happened in 2008? Well, prior to that, very nice large run to the upside, a pullback, a continuation higher, but we only got an ever so slight wick or two above that pivot. 1 wick, 2 wicks, done. That's it. 08 crash. So I mean, this pump took multiple years, so we'll have to see. But right now, it doesn't look good. Does not look good. Let's see. And DXY. I see how the DXY is doing. So DXY, I've gone over this yesterday's stream, but I want to reiterate. As long as we're above $100 off of that previous A here, that's going to be a bullish pivot. We came back down, retested it, didn't break a new low, but we formed a new ABC here. We have an ABC within the C, and technically this can be done. I'm not saying it is going to be done, but it can be done. So definitely keep an eye out on that. As long as we're above, that is bullish. It's going to be very interesting to see what happens in the next 15 minutes. All right, let's see. Y'all heard about X, aka Twitter, possibly becoming a crypto exchange too? Yes, I did hear. I didn't hear about the crypto exchange, but I know about X. I've heard about X. Doge. Nothing really has changed, Joe. Still the same. We're above that bullish pivot. Looks good. Mining cast with NFT. Okay, that's what it was. Mining cast with NFT. So it's a long-term play for the next bull run. Yeah, there's nothing wrong with that. If you're mining slowly, getting a little bit at a time, I think there's nothing wrong with that. Just be aware of the setups. Nice setup on ADA. If it drops a little bit, let's see. Let's take a look. Yeah, me personally, I don't like this. I'm not the biggest fan of this setup just because that extension just makes this look very ugly. If we didn't get that extension, we just got like a slightly higher high, I'd be a little bit more inclined to take it, but because of this extension, it doesn't look clean to me. So oh man, freaking Sol pumping 8% for no reason. Stinky coin. But yeah, I took the Sol trade instead. Hopped into a long at this local bottom at Doge. At around 0.77 baby scalp. If you're talking baby scalp, Joe, do I have to go to the 2-minute? 7.7. I can kind of see it. I can kind of see where you're coming from. There also is a nice set of ABCs here, so, but it's also on a 2-minute time frame. Let's see. I lost a lot on my cross account on B. Oh no. Oh, you played it on cross too? Oh no, FUD Miner. Oh no. Of course, BCH was the one that ran Infinity and beyond. There was a long setup though. I cannot deny that. There was such a good setup on BCH. My baby scalps have been paying recently. I just wish I had more balls to deploy more capital and don't want to destroy my R&R. Rumples, welcome back. Drop me your Discord. That's all you said. You wanted me to send a message or send you a friend request. I don't know your Discord, so just give it to me. If you're gonna be here for a little bit. Let's see. I asked him. He said he trades on Islamic accounts. Maybe that's why. I don't know. Maybe it's different. Maybe it's different. Is that the one that he trades on? Was that website you showed me? Joe, I would say start small and just build up. You know what I mean? If you can do something with it and build, you know, if you can take a small amount of money and build into it, why not? I would not deploy anything that you don't want to lose. Doing something like that. Johnny, have you tried different profit-taking options besides continuation, or is it always continuation with any type of capital? In the past, I've done like the old fib method. Like for example, you have this ABC setup, and basically what you would do is take profit at 50%. The problem with this is that you're kind of limited to the R&R. So that's it's a 2 point. That's terrible. You would have to use a very small stop loss percentage in order for you to kind of make something out of that. But you would have been stopped out a good amount of times. So unfortunately, that was one of the old ones that I used to use. But the problem with that is, one, sometimes the R&R trades are really bad. Two, you take profit too early. If you take profit too early, you're in a situation where you start chasing to get re-entries. It seems like it solves the problem of allowing you to take profit at the right time and not miss out, as well as allowing yourself to compound and not have to chase. Because if, let's say we're in a situation here where there's no good continuation setups and we just keep going, if you take profit off the table, you're just stuck on the sideline. But if you're holding your positions, waiting for proper setups, then you can go ahead and ride the wave. Since we are Muslims and swap fees are haram, man, I'm jealous. Swap fees are haram. I agree. Fun miner close to 10K. Now grinding hard to make it. Okay. Just be careful, man. Don't try to revenge. Don't try to revenge trade. That's how you destroy your account. He used to trade on that, but I think he was trading on my funded FX. Okay. What does wide spread mean? So basically, spread is the difference between what the price is now and what you're paying to get in. So for example, let's say right now you see BTC's price is at 29,330. Even though you see that on a chart on the exchange itself, if you're trying to short, your short entry will they won't allow you to get into like 29K. So there's a $300 spread between what the actual market is giving you and where your price entry is going to be, or based on the order books. So that's the best way to describe a spread. Drother, how you doing, my friend? Good to see you. I haven't seen you in a while. Hope all is well. Hope you're doing good. We're here to watch the shenanigans. Spread more so applies to market entry. Yeah. Yeah, I've been busy with working vacay. Oh, that's awesome. That's awesome, Charlie. Good to see you. Good to see you back, though. Oh, on Islamic account, spreads are a little high. Yeah, that if they don't kill you with swap fees, they'll kill you with spreads. This is my biggest problem with funded accounts. Like I said, if anyone can find a prop firm, that the rule sets aren't crazy too, as well as swap fees are low and not paying 10 to 15 times the amount that you would just for regular funding off of a crypto exchange, let me know. I would definitely check them out. AutoCAD, time for a pump song. I don't know what a good pump song is. I'm not Jason Casper. I don't have a pump song. Yeah, I really don't have a good pump song, unfortunately. If you have 15K, how much do you keep on exchange? If I have 15K to play, I usually keep like maybe probably like 10 to 20%. So $1,500, 3,000. Maybe up to a third. Let's see. Probably Islamic accounts have wider spreads to benefit from no swap fees. Same as mortgage percentage is haram, and Islamic banks sell property for higher prices, so customers don't pay percentage. Ah, that makes sense. That does make sense. Let's see. Add me on Discord. Okay. All right, I sent it to you. All right, Denzel Curry cover of Bulls of the Parade is my pump song. Unfortunately, if I play that, Joe, the stream's gonna get taken down. The last time I did that, the stream got taken down. Fund Miner, let's see, 12K for long-term trading and hodl exchange. The rest maybe for trading. Did my homework on that, lol. Crypto Dillo, Win Moon, good to see you, my friend. I don't know. I've made this point plenty of times, but for those who might not know, to be honest, me personally, this is always subject to change. But if you had to put a gun to my head and tell me to pick a side, right now I'm on the side that we're probably gonna test 19.5. I just don't see. There's a heavy resistance above us. And if we clear that resistance, there's nothing to 43K. To me, when it comes to timing of things, of where we are in comparison to the Bitcoin happening and how cycles play out, I just don't see it happening. If I'm wrong, I'll absolutely fall on that sword. But I'm not going to lean too heavily on one side or the other. I'm completely open to both sides. That's why we trade both sides. You'll never see me talking about a certain bias or a certain Elliott wave count for 2 to 3 months at a time. I'm sorry. I gotta stop talking. I gotta stop running my mouth, man. I'm gonna get myself in trouble. Never mind. I gotta stop. I just don't. I'm not the biggest fan of when someone takes one side of the coin and absolutely runs it into the ground. I don't like when people do that. If you can't come up with both sides of a situation or both sides of what could happen, I think you're doing yourself a disservice. You're holding yourself back. I'm always open. Even though I only trade setups when they arrive, I can make an argument for both sides of the coin. So. Let's see. This song is for pumping to the moon. I'll check it out. If it's on you, I just don't want to get the stream taken down. Because last time I played a song that was copyrighted, it didn't even give me a chance to take it off. They just took the stream down. Accepted. All right, cool. I like your profile picture, Rumble. That's pretty funny. That's funny. Why are you guys not using Kraken? Now it has perpetual swaps with 50x. Really? Don't they require KYC though? Like heavy KYC? Are you on CCS where that's where I'm learning crypto from? Yeah, I'm in their Discord. I'm not active on it. I'm in a couple Discords. The problem I have with I'm not saying problem. It's just with chart champions is that it kind of falls in the same category of how I feel about a lot of different channels. Smaller time frame, trading, trying to scalp, every single move as they can using all these intricate indicators that most people aren't gonna be able to figure out. Another problem I have is he always makes videos saying he's looking for higher prices and then gets a slightly higher high. It's like, I told you guys going for higher prices, but then he makes it seem like he's looking for some ridiculous number. And he always tailors to the idea or tailors his videos to what he thought was going to happen, or maybe he'll switch something up. I don't know. I'm not going to sit here and be too critical of him, but I seem like he's a good trader, but I'm just not a big fan of some of the stuff that he does or what he teaches or practices. That's just me though. Johnny, can't you make cash with your trading? Why would you look for another job? So I make money with my trading, but to me it's like I always picture trading as a, oh, hold on, let's get Jerome Powell up here. Hold on. All right, let me get it up, and then when it starts, I'll shut up. So pretty much, my thing is, I think of trading.
Automation is the easy.
Let me turn off the music.
This is for the American people. We understand the hardship that high inflation is causing.
I figured out a good volume.
We remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions.
Let me know if this is a good volume for you guys.
Since early last year,
if you need it louder, I can turn it a little bit louder.
Tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a 1/4 percentage point. And we are continuing to
Alif, I'll promise I'll answer that question.
Pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue.
I promise I'll answer that question. Just let's see what's going on here first.
The extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace.
Let me know, guys. Is the volume good, or do you need me to turn it up or down?
To have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged
up a little.
244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. there are some continuing signs
Let me know.
supply
Is that better?
and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap
Still
has
up?
narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary
know on the
policy
volume, guys,
actions are
good or
guided
bad.
by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food,
All right, cool.
housing,
I'll
and
shut up now.
transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary
The dollar
policy,
is dying.
the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Mr. Chairman, thank you. You have, I think, a couple times in your opening remarks talked about this language in determining the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit, And the June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance, including in particular in the labor market. We'll be looking at inflation. We'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting, and how we're thinking about meetings going forward potentially. But we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted, and I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
If I could just briefly follow up on something you said there. You said the data in the intermediate period, it broadly came in line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said. That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows. And we've seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape. And it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder, from your perspective, if that continues, if we see growth not just stabilizing, but performing well this summer, is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
Yeah, so I would say it this way. The overall resilience of the economy, the fact that we've been able to achieve disinflation so far without any meaningful negative impact on the labor market, the strength of the economy, overall, that's a good thing. It's good to see that, of course. It's also, you see consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that.
The dollar's moving.
And, seeing how it
BTC
evolves
ain't
over
doing
time.
nothing.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports, still strong but moderating, JOLTS looks good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
So if you go back to what we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations, and as a result, we went ahead and took another step. And that's a labor market that continues to be strong, but gradually slowing. I mentioned that the inflation report was actually a little better than expected, but we're going to be careful about taking too much signal from a single reading. And growth came in stronger than expected. So that's how we look at it, and so we did take that step today.
Buys pumping.
Nick Tamaros of the Wall Street Journal. Chair Powell, markets widely believe the median FOMC
Buys going for it.
inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data, I think, but with a particular focus on making progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information to make decisions. Would another CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data, and that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Hi, Chris Rugaber at Associated Press. So consumer confidence in the economy is rising, likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices now after trailing them for a long time. How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates it will strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down.
I agree, Joe. I agree.
Sorry, your question was?
Well, I mean, you've talked for many press conferences now about the harm created by inflation, how hard it is for people. So how much of that are we still seeing with inflation now down at 3%?
So I guess I would put it this way. I'd say it this way. It's really a question of how do you balance the 2 risks, the risk of doing too much or doing too little. And, I would say that, we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But we need to see that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because that's what we think core is signaling where headline is going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So But how much unemployment do you think is justified to get down that last?
So
it
is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And we hope that that's as little as possible. We have to be honest that is the likely
That's also
outcome.
a great point, Druther.
The worst
That's
outcome
another
for
good
everyone,
point.
of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside. So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see economic growth running at moderate or modest levels to help ease inflationary pressures. We want to see continued restoration of supply and demand balance, particularly in the labor market, and all of that should lead to declining inflationary pressures. Now, what we see is those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects. So we intend, again, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Well, I think we think today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more, and if it does tell us that collectively, if that's our view, then we will do more.
Thank you. Colby Smith with the Financial Times. If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down, the point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well.
I think we're going to make a decision about the next meeting, and then we're going to make a decision about the one after that, and I think it'll sort itself out.
Thanks. Howard Schneider with Reuters. Among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say, it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component of the broader uncertainty that we face. So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and we will use our tools to do that. No one should doubt that. I would look at it this way, though. The real federal funds rate is now in meaningfully positive territory. If you take the nominal federal funds rate, subtract a mainstream estimate of near-term inflation expectations, you get a real federal funds rate that is well above most estimates of the longer-term neutral rate. So I would say monetary policy is restrictive, more so after today's decision, meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restrictive until we think it's not appropriate to do so. So that's how I think about it. I mean, if I sum it up, I would say we've come a long way. We are resolutely committed to returning inflation to our 2% goal over time. Inflation has proved stronger than we and other forecasters have expected. And at some point that may change. We have to be ready to follow the data. And given how far we've come, we can afford to be a little patient as well as resolute as we let this unfold.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data that made you think you're getting a quantum of credit contraction beyond what you'd expect. The bank lending data really is, the growth rates edging down towards and heading below zero, which is usually a recession indicator.
So I guess the SLOOS will come out early next week, and I would just say it's broadly consistent with what you would expect. You've got lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard to tease out how much of that is from this source or that source, but I think what matters is the overall picture is of tight and tightening lending conditions, and that's what this SLOOS will say.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. Could you break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year?
Yeah. So, interesting question. So let me start by saying that the inflation surge that we saw in the pandemic resulted from a collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from restrictive
I agree, Philip.
policy,
I agree.
which would help return the balance between supply and demand by restraining demand. And we think
This
that's
word
broadly
gymnastics.
what we're seeing. So to go break it down a little further, of course, headline inflation has come down sharply from elevated levels as energy and food prices have come down, mostly due to reversal of the effects from the war in Ukraine. And that's a good thing, and the public experiences that, as I mentioned earlier. For core inflation, I'd say there has been a role for both factors, both that I mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the beginning of the reversal of spending back into services and away from goods. Take autos as an example. The combination of an increase in sales and inventories, while vehicle inflation has decelerated, points to a substantial role for supply. but there's also a role for demand as, the loans and things like that are more expensive. So they're both working there. Housing services inflation now starts to move down. Clearly, higher rates have slowed the housing market. I would say monetary policy is working about as we expect, and we think it'll play an important role going forward, in particular in non-housing services, where really we think that's where the labor market will come in as a very, very important factor. So we think both of those sources of disinflation are playing an important role.
I see. And just to follow up, do you think that of those two sources, that core will rely more heavily on seeing an impact from rate hikes, or is there a more even split there too?
I think monetary policy is going to be important going forward, because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing. So I think going forward, monetary policy will be important, particularly in the sector, in the non-housing services sector.
Thank you, Chair Powell. First, let me compliment your tie, the choice of tie. So thanks for taking our question. So the Beige Book, it said, input cost pressures remain elevated for services firms, but eased notably for manufacturing sector. Is that an indication that there's a wage inflation pressure? And how do you target and pressure on the wage inflation without pushing the economy into recession?
I think as it relates to goods, it's really an indication that supply chains and shortages are easing. And so, what was the first part of it?
So wage inflation. Like, how do you target wage inflation without pushing an economy into a recession?
I don't think we're targeting wage inflation. I think what we're looking for is a broad cooling in labor market conditions, and that's what we're seeing. So, wages have actually been gradually moving down. They're still at levels that would be consistent over a long period of time with 2% inflation. Nonetheless, we're making progress there. And by so many indicators, labor market demand is cooling. You can look at surveys by workers and businesses who see that. You can look at the quits rate normalizing. You can look at job openings coming down. You can look at just job creation in the establishment survey has, it's still at a high level, but it was at really an extraordinarily high level for most of the last 2 years. So you see cooling, particularly in private sector in the last in the last report. So I think we see that, and it's happening at a gradual pace. So that's actually not a bad thing in a sense, because if what we see is a labor market, very strong demand for labor, which is really the engine of the economy. People are getting hired, many people going back to work, getting wages, spending money, and that's really what's driving the economy. But that it's gradually slowing, it's gradually cooling. That's a good prescription for getting where we want to get.
But still, we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike. And the common thing is they come out with agreements like big pay increases, like UPS, and we have the auto workers coming up. Are you concerned then about a trend of series of big unions, these contract pushing wage inflation then?
Not for us to comment on contract negotiations. Not our job, not our role. We monitor these things and we'll keep an eye on them. But really, that's something that's handled at that level, and not.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around or under 3%. And so I'm wondering, is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates, or is the speed at which inflation is falling also important?
I think you'd take both into account. I think you'd take everything into account when you start cutting rates. It would depend on a wide range of things. And when people are writing down rate cuts next year, it just is a sense that inflation is coming down and we're comfortable that it's coming down and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high twos, you wouldn't necessarily cut rates.
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, many people wrote down rate cuts for next year. I think the median was several. for next year, and that's just going to be a judgment that we have to make then, a full year from now, and it'll be about how confident we are that inflation is in fact coming down to our 2% goal.
A good part of Wall Street has become more confident that the Fed is going to be able to engineer a soft landing, and they've reduced their forecast for a recession. And I'm wondering if the staff has changed its view on the likelihood of a recession being likely, and if you personally have changed your view in terms of becoming more confident that you can achieve a soft landing.
So it has been my view consistently that we do have a shot, and my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past instances, many past instances of tightening that look like ours. That's been my view. That's still my view, and I think that's sort of consistent with what I see today. So, but it's a long way from assured, and we have a lot left to go to see that happen. So the staff now has a noticeable slowdown in growth starting later this year in the forecast, but given the resilience of the economy recently, they are no longer forecasting a recession. I just want to note that that our staff produces its own forecast, which is independent of the forecast that we, as FOMC participants, produce. Having an independent staff forecast, as well as the individual participant forecast, is really a strength of our process. There's just a lot of, I think, constructive diversity of opinion that helps us informs our deliberations, helps us make, I hope, better decisions.
And is the reason for optimism that inflation has come down and you still have a strong labor market? I mean, does that add to the optimism?
I wouldn't use the term optimism about this yet. I would say, though, that there's a pathway. And yes, that's a good way to think about it. We've seen so far the beginnings of disinflation without any real costs in the labor market, and that's a really good thing. I would just also say the historical record suggests that there's very likely to be some softening in labor market conditions, and consistent with having a soft landing, you would have some softening in labor market conditions.
How you doing, my friend? Good to see you.
Likely,
we're just hanging out, watching FOMC
as we go forward with this process. But it's a good thing to date that we haven't really seen that. We've seen softening through not through unemployment, not through higher unemployment. We've seen softening through job openings coming down part of the way back to more normal levels. The quits rate, so people are not quitting as much. We've seen participation, people coming in, and so labor supply has improved, which has lowered the temperature in the labor market, which was quite overheated, going back a year or so. So we're seeing that kind of cooling, and that's very healthy, and we hope it continues.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with the inflation numbers coming down? How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation gets to 2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it. So in effect, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt, but people are cutting rates next year because the federal funds rate is at a restrictive level now. So if we see inflation coming down credibly, sustainably, then we don't need to be at a restrictive level anymore. We can move back to a neutral level, and then below a neutral level at a certain point. I think we of course would be very careful about that. We'd really want to be sure that inflation is coming down in a sustainable level. And it's hard to make. I'm not going to try to make a numerical assessment of when and where that would be, but that's the way I would think about it. Is you'd stop raising long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until, all the way back to 2 until 2025 or so. So.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. It's been over 4 months since a handful of regional banks, including Silicon Valley Bank, failed. When you look at credit conditions now, given Banc of California's acquisition of PacWest, does this acquisition suggest the full impact has not been felt, or are you comfortable saying that we've seen most of the ripple effects that may have occurred at this point, and how does this play into your outlook for policy?
So I don't want to comment on any particular merger proposal, but I will say things have settled down for sure out there. Deposit flows have stabilized, capital and liquidity remain strong, aggregate bank lending was stable quarter-over-quarter, is up significantly year-over-year. Banking sector profits generally are coming in strong this quarter, and overall the banking system remains strong and resilient. Of course, we're still watching the situation carefully and monitoring conditions in the banking sector. In terms of the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that were more affected by the turmoil in March than others, it's very hard, as I mentioned, it's very hard to sort of tease out the effects on this very large economy of ours from them tightening. They may be tightening a little bit more, probably are, than other banks. The SLOOS has been telling us for more than a year that banking conditions are tightening. That process is ongoing, and that will restrain economic growth. So I think we have to take a step back from. I can't separate those anymore. I think basically we're just looking at the overall picture, which is one of tightening credit conditions, and that's going to restrain economic activity. It is restraining economic activity. So that's how I would look at it.
And how is that informing your outlook for setting policy?
So I think that is an expected result of tightening interest rate policy, is that bank credit conditions bank lending conditions would tighten as well. And so the question is it more effective this time because of what happened in May?
ABC.
I just don't think we know that. I think we're looking at the current data in GDP, and we're seeing strong spending. We're seeing a strong economy, and it's made us confident that we can go ahead and raise interest rates now for the third time since the March events. It seems like the economy is.
Yep, I saw that too,
weathering
Joe.
this
Yep.
well, but of course we're watching it carefully and expect to continue to do that.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I wondered on wages if you were at all concerned about any inflationary impact of wages now outpacing inflation, which is likely contributing to the boost in consumer sentiment and the continued strength of the consumer that we've been seeing.
Well, wages in excess of inflation means real wages are positive. Again, that's a great thing. Of course, we want that. We want people to have real wages, but we want wages to be going up at a level that's consistent with 2% inflation over time. As I mentioned, nominal wages have been coming down gradually, and that's what we want to see. We expect to see more of that. That's just more of what's consistent over a longer period of time. We don't really think that wages were an important cause of inflation in the first year or so of the outbreak, but I would say that wages are probably an important issue going forward. Labor market conditions broadly are going to be an important part of getting inflation back down, and that's why we think we need some further softening in labor market conditions.
This goes sort of to the balance of risks question, but you mentioned at the start how you're keeping an eye on consumer activity and whether there might be some sort of a rebound there. And I'm curious what the Fed's explanation would be to families if further interest rate hikes start to hit the labor market, start to drive that sentiment back down. What's the message there of why you continue to keep rates elevated or to raise them?
Well, we have a job assigned to us by Congress to get inflation under control. And we think the single most important thing we can do to benefit those very families, especially families at the lower end of the income spectrum, is to get inflation sustainably under control and restore price stability. We think that is the most important thing we can do now. and we're determined to do that. And I would just point out that the people who are the most hurt by inflation right away are people who are on a low fixed income, who, when you're talking about travel, or transportation costs, heating costs, clothing, food, things like that. Those, if you're just making it through each month on your paycheck and prices go up, you're in trouble right away. Even middle class people have some resources and can absorb inflation. The people in the lower end of the income spectrum have a harder time doing that. So we need to get this done, and the record is clear that if we take too long, or if we don't succeed, that the pain will only be greater. So that's how I would explain what we're doing.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You had said last month that this meeting this week was going to be a live one. In the event
Leaf, I was going to talk about that after, but
roughly 99% probability
you can rewatch it.
The rate move that you announced today. The decision was, of course, unanimous, and the statement was basically unchanged from last month. So may I ask, to what extent was the meeting actually a live one? Was there ever any doubt over the past 2 days about what the decision was actually going to be?
Well, was there doubt? I would say there's a range of views on the committee, and when you see the minutes in 3 weeks, you'll see that. There's a range of views about what we should do at this meeting and what we should do at the next meeting, and it's a process that we go through. Many times when we go into a meeting, the decision is not, fundamentally in doubt. Nonetheless, we have the meeting, and some meetings are less uncertain than others, and
I'll explain. I'll explain after.
Evan Reiser, Market News
I gotta get a refill. I'll be right
Chair
back.
Powell. Financial conditions have been loosening at a fairly steady clip in recent weeks. The dollar, the stock market, etc. What does that mean for the Fed in being sure that inflation will come down to target?
So we monitor, of course, financial conditions, broad financial conditions. You're right; it's the dollar and equities, and we're of course very focused on rates and our own policy. We're going to use our policy tools to working through financial conditions to get inflation under control. The implication is, we will do what it takes to get inflation down, and in principle, that could mean that if financial conditions get looser, we have to do more. But what tends to happen, though, is financial conditions get in and out of alignment with what we're doing, and ultimately, over time, we get where we need to go.
If I could also ask about the SEP from June that showed rate cuts. Do you expect the Fed to cut nominal rates next year while also continuing QT?
So that could happen. The question is, is that consistent with? So if you think about both of them as normalization, imagine it's a world where things are okay, and it's time to bring rates down from what are restrictive levels to more normal levels. Normalization in the case of the balance sheet would be to reduce QT, so to continue it. You depending on where you are in the cycle. So they're two independent things, and really the active tool of monetary policy is rates. But you can imagine circumstances in which it would be appropriate to have them working in what might be seen to be just different ways, but that wouldn't be the case.
Thanks, Chair Powell. Kyle Campbell with American Banker. I have a question about the discount window. I'm wondering if since the bank failures of the spring, if you've seen signs that banks have taken more steps to be proactive in assuring that they're ready to use that facility if they need to. And if you have any sort of thoughts on whether policies might be appropriate for making sure that banks sort of test regularly to show that they are prepared to use it. Thanks.
So that's a very important thing, yes, and yes to both sides of that. Yes, banks are now working to see that they are ready to use the discount window, and we are strongly encouraging them to do that, banks broadly. We did find, as you know, during the events of March, and that that it's a little clunkier. It can be a little clunkier and not as quick as it needs to be sometimes. So why not be in a situation where you're just much more ready in case you need to access the discount window?
Mr. Chairman, Mark Hamrick with Bankrate. You've talked in the past about getting the housing market back into better balance, excuse me, and also that the market might have bottomed. Where do you see that situation and balance, or lack thereof, right now, particularly with the constrained inventory of existing homes that might otherwise be coming onto market at a time when existing homeowners are reluctant to move? And of course, all of that happening with the 30-year fixed-rate mortgage still around 7% on the heels of Fed tightening, and with what you're talking about, tightening industry lending standards. Are we getting closer to balance or farther away? What's your sense?
I think we've got a ways to go to get back to
I
balance,
agree.
really,
Yeah,
for
that's a
the
great
reasons
question.
that you talked about. With
Good night,
existing
Alif.
homes,
I'll talk about it
many
after this,
people
so if you
who
want to
have
rewatch
low-rate
it.
mortgages, and whereas they might want to sell in a normal situation, they're not going to because they have so much value in their mortgage, which means that supply of existing homes is really, really tight, which is keeping prices up. On the other hand, there's a lot of supply coming online now, and there are people coming in. A lot of the buyers are first-time buyers coming in at buying it, with these relatively elevated mortgage rates. But I think this will take some time to work through. Hopefully more supply comes online, and we work through it. We're still living through the the aftermath of the pandemic.
We'll go to Nancy for the last question. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Russia has pulled out of an agreement allowing shipments of grain, safe passage through the Black Sea, and alternative routes at this point could be closed off. Just wondering, how could that contribute to higher food prices and inflation generally, and how closely are you watching that?
We are watching it, of course, very closely. And you're right, the withdrawal from the Black Sea Grain Initiative does raise concerns about global food security, particularly for poorer countries that import a large share of their food. Grain prices did go up on this news, but they remain well below their peaks of last spring. And the moves that we've seen so far, I would say, are not expected to make a significant contribution to U.S. inflation. Of course, we will be watching that situation carefully.
So you don't think it would have a big effect on Fed policy at this point?
You wouldn't say so, looking at what we know now.
Thank you.
Thanks very much.
All right, guys, what do you think? What do you think? So, let me get the music back on. I want to talk about some things. So, first of all, as always, you guys know, it's always a bunch of word salad. There are some interesting points they brought up, and it's very interesting to see what could be going on in the future. Does it really going to make a difference as of now? No. We'll definitely, yeah, there's more, just like Joe. Yep, exactly, Joe. Same old nonsense. Rate hikes, more rate hikes coming. So do with that as you please. We're going to have to, it's going to be one of those situations to where price is going to initially move. It's going to stagnate. Once you get closer to FOMC, then we're going to, hold on, let me turn myself down. All right. So it's going to stagnate once we get back to closer to the FOMC. Then it's going to start, kind of consolidating. It's just going to be the same old nonsense. So be on the lookout for a move coming here shortly. It's never during FOMC. It's usually a week or a couple days to a week after. I gotta turn on my AC. I want to talk about some things. If you guys have any questions, please let me know. But I'll be right back. Hold on. Let's see. Wish they did 0.5 today and just dumped the markets. That would have been really fun. Price did not move much today. Yeah, but it's zero. It's usually after FOMC. So, I think once we, I'm not sure about today, but probably in the next couple days, if not by next week, we should start getting a little bit more price action here. Next move after the new monthly, probably. Yeah, that's a good prediction, Yash. So I want to talk about something Alif was saying, and this is important for you guys to understand as well. When it comes to trading, when it comes to how I view trading, because we're not doing this on a frequent basis, and because we're not, trying to scalp every day, you have to understand that trading is consistent, but the way we do things is kind of slow. So when if you need to figure out, one, if you want to do this full time, how much you're going to need. In order for you to figure that out, you need to figure out, let's pull out the notebook here. All right. So in order to figure this out, you need to figure out what's your win percentage? Slash no, let's just change it to monthly. So you need to figure out what your ROI. You know what? I'm just gonna restructure this. What's your ROI on a monthly average? 2. Dedicate 25 to 50%. Winnings to take out. All right, so you need to figure at least these two. I can't spell compound. And then say the third. All right, figure out your budget. So these are the 3 main components you need to figure out in order for you to figure out if you can trade full time. And Alif brought up a question before. I'll bring it up in chat here. Basically, he said before we started here. Where is it? Come on. All right, this is the second time he asked it. Huh, I can't find it. But basically he was asking, why can't you make cash with your trading? Why would you look for another job or something on the side? You have to think of trading as not as a way of, how do I say this? Trading should be viewed as an accelerated savings account versus a way to make money. All right, you should think of your trading as a way to get to your goals faster. It's not, for me at least, it's not a way to just live off of. I want to aim for a much larger number. Once I get 2 of these larger numbers, then I can start focusing on cashing out more. And as of right now, I'm pretty much I'm taking out a very tiny amounts that I need to live. I'm not living a luxurious lifestyle. I'm not, going on vacation constantly. I'm not doing all this shit. All the money that I make is going right back into my account. And as of right now, I can tell you this. I can tell you guys this. Let's see. I remember the times first time I see me the volatility, good times. People often forget you just started trading 3 years ago. Exactly. Lies. You're talking about buying a Tesla car. I'm still gonna do it, Philip. I'm still gonna do it. All right. But not right now. And yeah, and you guys gotta understand too. I've only been doing this for maybe since late 2019, early 2020. So I've been only in this game for 3 years, maybe 4. Or we're getting close to 4. Actually, yeah, we're getting close to 4. So you also gotta understand. I'm not sitting here. I didn't start off with what you'll see online. And I'm not gonna put anyone under the bus, or throw anyone under the bus. What you see a lot online is that people make a lot of money, but a lot of the times they did stupid shit like maxing out credit cards, taking out loans, doing all this crazy stuff. I didn't do that. I only had a couple $1,000 to start off with, and I turned it into a lot. All right, I got lucky with trading. I got lucky with buying at the right time, and those combination of the 2 things led me to where I am now. And I plan on doing the exact same thing again and making more money. So you have to figure out what is your average monthly return. All right, I can give you guys a confident answer here. On this account, all right, and mind you, I play things a lot less aggressively on my main account. So let's do compound. And Crypto Dylan, I see. I'm going to show you something that's going to answer your question. I'm going to show you something that will answer. All right. So I want to show you something. Let's say you're starting off, and I'm going to give you my results on my macro because I've been tracking this. Because I've been using slightly different parameters when it comes to my actual how I structure my trades on my macro account. I can confidently say I'm like anywhere from the 3 to 5% a month. So let's use the lower end, 3%. Right? And let's just say, well, you can use any number you want, but let's just say I'm going to use 30,000 to make it easy. Right? $30,000 off a course of making about 3% a month. Right? It's not that much money. $1,000 a month. It's not that much money. All right, even if you had like 60,000, sure, but I don't have $60,000 to play with this account. I'm only making $1,900. It's not that much. All right. So I'm gonna say what I'm playing with is between this number and the high number that we saw before. All right, and this is just me compounding it. All right, if I took out, let's say I took out half of that every month. All right, I'm only taking, and this is realistic, I'm only taking out a couple $100 to where it's just enough to pay bills. Like it's nothing that intricate, it's nothing that crazy. And this is off of 30K. So this is kind of realistic of what I'm working with at the moment. But if you had 300,000, it's a little bit different. You know, you could sit here and take out $4 to $5 grand a month and live a good life making 3% a month. And that's conservative. So for me, it's a way to supplement income. I don't feel like taking out all the money that I'm making because I'm not making any progress. At some point, all right, let's say 450. You can see my initial balance is only going up ever so slightly every month. And this is how it is. Like I'm not making tens of thousands of dollars a month off of 30K or whatever number I'm deciding to do. That's not how it is. So for me, being realistic, I understand that I can use this to leverage and compound over the next, like, let's say I do this over the next 5 years. All right, over the next 5 years, after year 3 or 4, that's when it starts getting, pretty decent. We're going to be sitting at 175K, but this is without me investing. This is without me doing, this is just a portion of my amount that I'm planning on or that I used to trade with. This is not including my spot buys. It's not including anything else of that nature when it comes to, this is only just dedicating to swing trading. Now let's do now this is going to answer your question. Oh, it's not Crypto Dylan. I'm sorry. It's Jack Black. I'm sorry. For some reason, I thought you were Crypto Dylan. So for Jack Black, I'm going to answer your question here. Now with my aggressive account, I'm making about 5 to 10% a month. Average between that is about, I would say 7.5. Right? So let's say we're averaging in the middle. And let's say over the course of a year, you start off with $1,000. All right? In a year, you would have started off with 1,000. You would have ended up with about 2,300. All right? It's not that significant. What I recommend you do if you're starting out small is start out with a small amount and dedicate a certain amount of money into the account every month. Let's say you want to dedicate $50 a week. So $200 a month. All right, let's say you start accumulating. Well, do you see what happens here? Your 2,000, what was that number? 2,400, something like that, turns into 6K just by adding an extra $200 a month by the end of, or at each month, and by the end of that a year period. Now, at a certain point, if you do only do $200 a month, it's going to get to the point where it doesn't really make a difference. In 2 years, it turned about to a 19K. Right? This is if you're conservative. This is if you're doing well, sticking to the setups, being patient. This is if you're a good trader. If you a little bit on the beginner side, I would say 5% is pretty attainable. And what I would say is stick to these parameters, play with the numbers. Go to a compound interest calculator. You can use this one, there's other ones you can use. Figure out what you want to work with, figure out what you want to play with. And me personally, I think it's best, especially if you're new, to start out small and add to it. Because what's going to happen is you're going to make mistakes, you're going to mess up, but accumulating and adding into your account, it'll limit the losses you take, and it'll also help you grow more exponentially. And so you can kind of get the best of both worlds and allow you to teach yourself and allows you to get more practice in ABCs without blowing your entire account. So for me personally, if I had to give you a choice between two options, I would say if you're new, or let's say you're not too experienced in trading, start out small, accumulate, and then from there, once you get through, go through the ropes and understand different situations in trading, you'll become a lot better, become a lot more consistent. Then it'll make more sense. You'll start seeing the money grow. So me personally, I would say start small. Let's say trading should be a source of income, like a side source of income. It shouldn't be your main source. Me personally, I've been thinking about this recently. I have friends who work full-time jobs or have full careers, and they do this. And they're killing it. They're making really good money. And in my head, I think the best case scenario after talking to them and kind of seeing how they treat their work-life balance and all that, and what's realistic for most people, I think what's realistic for most people is trading should be a way to allow yourself to go and work towards whatever you want to work towards, not being able to be tied down to a job. If you want to, start a career in music, you can start a music career. You're not going to make that much money doing it, but if you have enough money to make off of trading and to live off of, go ahead and pursue your career. If you want to be involved in like a tech job or something, if you want to do something in coding, you're going to make a lot of money doing that. All right. If you're passionate about doing that stuff, you're going to make a lot of money. You can make even more money taking the money you invest or taking the money you save, trading and working alongside with your career. That's going to make you rich a lot faster than just trading will alone. It's unfortunate truth. There's a lot of people you see online that are constantly flexing, I made $10, $30, $50,000 in a day. For that one person you may see online, there's 50, 75, 100 people that you don't see online who are blowing their entire life savings, potentially doing something really stupid because they messed up, because they had this unrealistic expectation in their head because they thought they can make all this money trading. That's not realistic. So I need you guys to understand that it's once you get yourself more grounded and understand that what real trading is, then you can kind of take a step back and understand, okay, what can I do with this? At the end of the day, I want to do this full time, and I am doing this full time. There may be something else that comes up soon that I might have to consider moving part-time, because to me, it makes more sense to, work a job, make money, invest that, be able to live a little bit versus, not being able to take more advantage, or at least take not as much of an advantage of the potential bull run coming up just by sitting here trading and making a little bit out of that, if that makes sense. But Jack Black, let me know if that answers that question. Let's see. Isn't this the point where everyone who doesn't have like millions is better off buying good altcoin projects? Like, you can't replicate 10 to 100x in 2 years trading. Yeah, I think, Yash, I think it should be a balance. You shouldn't put your entire life savings into altcoins. You should be trading, making money, and you can sprinkle if you want. But it's almost the same idea with altcoins. You can't have this unrealistic expectation, because altcoins is like playing the lottery. You can take money and throw money at a dartboard and throw it at random projects you want. A lot of them are going to fail. Some of them, one or two of them, might do really good to make up for your losses on other projects and some. But yeah, for me, it's about taking advantage, and you also have to understand with BTC kind of maturing at this point, the price action we're going to get is not going to be as significant. So in order, you have to have more money in your account to make the same amount as you would last bull run. So to me, it's about accumulating and making sure you have a good stack going into the bull run, and also being able to make money off of trading and combining both and using the power of both hodling and buying and also trading to propel you even further. The people that are making 4 to 5K a day are using portfolios of like 500K plus. Exactly. And who has $500,000 to play with? And if you're using prop firms to get that kind of money, good luck being consistent. Good luck. There's too many rules. You're going to have off days. Is it possible? Absolutely. I cannot deny that it's possible. Is it probable that most of you guys are going to be able to do this? Unfortunately not. Unless we can find a prop firm that has very low swap fees or no swap fees and can also help with, well, that, and I would say less rules, but that's not going to happen. In my opinion, we will have an economic downturn. Make all the money you can in the short term, whatever you can, crypto or not. Get a side gig. Yes, exactly. I agree, Jother, 100%. Your chances, if you have an edge, you can take your $100 account to 200 in a year. You can call yourself one of the best. If you can do that, go get funded. Prop firms will cancel consistent trade accounts with some BS excuses. Yes, I've heard those as well. They really don't want you to win. And so, yeah, no, I think if you have like $100 and that's it, maybe that might be the best. That might be the best way to trade. Do I recommend it? No, you're probably gonna fail. But you know, if you have $100, you can't do absolutely nothing with $100. Let's say you have $100 and you didn't deposit anything. Let's say you traded this account for 10 years. Oh, okay, actually, never mind. That's actually a decent amount of money. Let's do like 2 years. All right, in 2 years, you turn $100 into $300. That's you're making $5 a month. That's nothing. I wonder where it starts to get a little ridiculous. Even in 5 years, that's not that much money. I think by like 8. Okay, yeah. Okay, yeah, this makes sense. Yeah, okay. But yeah, it's not that much money. So if you have $100 and that's it, maybe go check out a prop firm. But I would, you're going to have a very tough time. You're going to have a very tough time. Problem is you guys go for unrealistic targets. Yeah, that's a big problem too. It's a unrealistic expectation in crypto, or just in trading in general. Like if I go on YouTube, I don't want to fuck up my algorithm. If I type in trading, $4,000 in 10 minutes. $10,000 in 4 minutes, $785 in 5 minutes, $30,000 a day. Like, you guys have to understand, this is not realistic, and I don't care what anyone. I will fight anyone on this. The ABC of profitable trading.
So
hold on. Okay, just talk about R&R. But it's the same thing. Having this idea that you can make all this money every single day, and this one makes me cringe. Like, unfortunately, guys, like if you think you're gonna be able to do stuff like this, it's not in your favor. It is not in your favor. $6,000 in a day. I can do this all day, but you guys know what I mean. Let's see. Personally, I would become a copy trader than go to a prop firm. The problem with copy trading that I have seen is that it's based on fixed R&Rs. And I don't like that. I like having my trades open and taking profit when I need to take profit. In my opinion, I would probably, if it wasn't for the swap fees, man, I'm telling you, if someone can find me a prop firm with little to no swap fees, I will use them, because that is going to, because we're basically beating the system by not following. I mean, we're following the rules, but not being too proactive. The swap fees is what kills you, but you're not gonna get that. I'll be surprised if I can find something like that. Let's see. I would, if I want to trade with someone else's money. Okay, yeah, I guess. But me personally, I'd rather just go prop firm. I think if you can only afford 1,000 or 100, then 1,000 profit should be a decent money where you live. Yeah. Most people don't take profit. They want to trade to be grand slams when they only setup is only a double for scalping. Exactly. Yep. Nope. I agree. We hit grand slams, but we take swing trades. Yeah, but at some point everyone beats the S&P, but then they round trip, including me. Yep, that's true. What if it's their money they get funded? What if it's not their money they get funded? Where if you're like using someone else's money on the side, that's a little bit different. People here can understand if you can take $100 to $200 a year, which means double the account. That means you can do the same with $500K. What I'm saying, none of you can do that. Scalping is dead with quant trading. Swing positions is the only way to be consistently profitable. Yes, I agree, you meant. Stop making unrealistic targets. Well, I mean, I've taken $1,200 and I've doubled it. But the problem is, it's how you do it. The reason why prop firms don't work is because of the rules, the parameters, swap fees. There's a bunch of different things I can go over that they use to screw you. Right? That's why, yeah. Could I take 1,000? Could I take half million turn to $1 million? Probably. But that's not including the rules that they give you. The reason why it's so hard is because most people scalp. All right, that's the biggest problem. Second of all, they make it very hard for you to be consistent. The less rules you take away, the easier it is for traders to make money. So. Can I know the web? What do you mean by that, Chandra? Here we go. BTC maybe go into 32K again. What makes you say that, Joe? We're just going a little. We're just still sideways. I don't think we're going to 32K. If anything, this is becoming a larger ABC like this. ABC for an A, B, C. How do they make it difficult for you, Johnny? The props? So let's go to, what's a good prop firm that you guys recommend? Top Step. Let's do Top Step. Let's look at the rule sets. Where can I get the rule sets? Where's the rules? This one doesn't really give me like a set of rules that they have. Yeah, this one doesn't. What's another one? Let's see. The funded FX FTMO.
Manage up.
Let's see. No maximum trade. Okay. So one of the biggest, I think what I've noticed is that prop firms have been doing this recently. They've been taking away the minimum amount of trading days, which is a good start. See, we work with ACAP. Watch this. Hold on. So I read somewhere on a Reddit post that swap fees are extreme on both ends, but on the crypto funded trader platform that I used, they were screwing me on both ends. I've held long positions, I've held short positions. They both were screwing me on swap fees. I thought they would tell you like exactly what the percentages were. But yeah, to be honest, the rule sets have been getting a little bit more relaxed, which I like. One of my biggest problems is swap fees. Literally, it's just swap fees. That's literally the only thing stopping me right now. Let's see. Propeller firm. Let's see. I'm thinking hodling makes more money than trading considering losses. It can. But I think if you do it right, Philip, you can make a lot of money trading. You can make a lot of money trading if you do it right. Why are you playing with a 1K account for a year? This will take you 200 years to get somewhere. If you got your edge, which I believe we do here with ABCs, go get funded. Like I said, the biggest problem is swap fees. Literally, that's the only thing that's stopping me. If you guys can find me a broker that works with prop firms that has very little swap fees, I will do it. I'll say it right here. I will try. Raise my right hand. I swear I will try it out. Seriously. Oh, Supreme Cat. I'm sorry, Supreme Cat. Don't know what their swap fees. I haven't tried BitX. I haven't tried that. But Zero, you're right. But I have a larger account that I play with on the side. Like my 1K account is just to show you guys what you can do. I have a main account that I trade. That's a lot bigger than $1,000 bucks. That's the reason why I do it. If I had an opportunity to do so, I promise you guys. Swap fluid fees. Jesus Christ, Joe. Are links allowed here? I wanted to share Trader's Prof. I don't know. You can try, Yash, but if not, you can just send me the link. I'll look at it. I can put links in. I haven't tried BingX. Is it an exchange? Is this a prop firm? This just seems like a regular exchange. Supreme Cat. We're talking about prop firms. Or like if an exchange came out with a prop firm, like a crypto exchange, that would be freaking amazing. I use ACAP. I pay 10% of profits to swap fees already. Exactly. And how long are you holding that position, you meant? 10% in how many days? I'm curious how many days. Doge to the moon. I don't like to see soul pumping. I don't like that. For 1.5 months, yeah, that's terrible, dude. That's terrible. I was paying more on another one. So let's same here. I got larger Coinbase account on the side, but if you got an edge here, you can make 10% profit on the account. Go to 200 and 500K account, get funded, and get sorted by next Christmas. No, Zero. Like literally, I think if you can make it work, you can take advantage of the system. Absolutely, do it. Give it to him. Give him the good old 1-2. It's literally the swap fees. It's literally the swap fees. BingX allows to trade ES, NQ for, okay, etc. with crypto. That's unique. Okay, that's actually pretty cool. I'll check this out. If someone, do I have to pay you guys? Maybe I'll do that. If you guys can find me a prop firm, if you guys can find me a prop firm that has that uses a broker or it's its own broker that has low swap fees and is legit, I will pay you. I will pay. There will be a bounty for that. What would the bounty be? I'll give you guys $100. They don't exist. Exactly. They don't exist. But if by some chance you guys can find one, if this is an open bounty, if anyone can find me a prop firm that uses a good broker with low swap fees or has little to no swap, or at least I'm not saying no swap fees, little swap fees. I'm not paying, I'm not paying 20 to 30% of my profits in swap fees, right? If you can find me a broker or a website that has low swap fees and it's legit, I will give you guys $100. I'm gonna get sponsored by Prop Firm, still trying to use my sign-up code. That will work too. That's an open bounty though. I will leave that open to everyone. They will go bankrupt. To be honest, yeah, they probably will. They would. Or maybe they won't because people are too busy trying to scalp. So maybe if they're not worried about. I think it's possible. I definitely think it's possible. So do your homework, guys. I will pay you if you do some homework. How about interactive? I've never heard of that, Supreme Cap. Bro, I use instant funding, low fees. Is it low trading fees or low swap fees? One Life Passion. Let me know. I'm serious. Like I'll try it out. Now, in order for this to count, I have to actually try it, trade with it, make sure it works, make sure there's little to no swap fees, and then I'll pay you. Low swap fees, instant funding. Is it instantfunding.io? Let me know this is the right one. One Life Passion. I'm serious. If you go down to Tradingview trading panel, you can see them there. I'm pretty sure they have low fees. Never mind, you're searching for funding. Yeah, I'm looking for prop firms. IO. I'm going to email them. Let's see. Okay, Johnny, thanks for the live. I got to see you. Have fun on the trip. I'll be here tomorrow. Supreme Cat. After tomorrow, I'll be gone. One Life Passion. I'll look into this. Give me your Discord. If this is serious, if this is legit, I will send you $100 if this works. I'm going to probably... I'm going to email them. Eight cap. I've used one with ACAP and they did not have, they had very high swap fees. I'll give it a shot though. I'll give it a shot. I'll email them. Yeah, ACAP is not good. Notice how they don't talk about their swap fees. Johnny, can you let us know if you find a good prop firm? Yeah. And you guys are gonna have to help. You guys are gonna help out. Scalping is okay. Yeah, but we don't scalp here, One Life Fashion. We don't scalp here. We hold trades for weeks. Do we allow martingale? Right now, the baby scalp is 80% profit. I took half on the table about 2 minutes ago. Take that tiny one, Joe. Good trade. You know that you get charged every 8 hours on an open trade on any broker, do you? What's the problem with props? Well, the problem is it's the percentage. So let me show you this. Roll it. Hey, that looks like the one I have. Wait, is that the same one I have? No shot. Oh, well, if you guys don't know, I have a watch. Just that's really fucking funny, actually. Oh, that's a date just. This is just a regular. I have that same one. Pretty funny. All right, so let me log into. I just need an orange Lambo. Does anyone want to buy me an orange Lambo that says Bybit on it? Bybit on it. All right, so watch this. The difference between. So let's see. You get charged every 8 hours to open a trade. Okay, so look at the percentage though. The percentage is 0.0066% of my position. All right, and that's of the margin or the value. All right, so I think is it all guys? Is it off the value? Is it off of the margin? I think it's off the margin. All right. The difference is I'm paying literally half of a penny every 8 hours. Even if I hold, let's say if I multiply this by 3, I'm literally paying a penny a day to hold a trade. In order for me to have this make a significant dent, I would need to hold this. And also I'm getting paid this, right? This is not me paying. So if I was in the long position, I would be paying this. So let's just say this is a long position, right? So in order for this to make a significant, let's say a 10% difference. So it's 6 divided by. I would have to hold this for 45. Wait, is that right? Yeah. I would have to hold this for 45 days without making any profit, without cashing out, in order to basically sustain this position. But because I'm actually making money off of a holding a short, I'm up $21. I think my math is right. Oh, it's off total value. Oh, okay. Never mind. I'm doing this wrong. Okay. Thank you for correcting that. I'm sorry. Let's just do the math anyway. All right, so I'm paying 22 cents a day. And let's say I hold this for 2 months. Well, that's a lot. That's a lot of days. So over the course of 2 months, I'm paying $13, right? Let me see if I can log into... Hold on. I definitely don't. I should remember to log in. Well, I'm gonna do something. You know, I didn't do this last stream, but I'll do it this stream. I will do it this stream. Yeah. I wonder. I thought I closed out this trade. I might have. If I didn't close out this trade, or if I did close out this trade, this would be a waste of time. But I'm pretty sure this trade's still open. Or maybe I got stopped out. Where is... God damn it, dude. Okay, I did cash this trade out. Damn. Well, this was useless. Oh, I can look at this. Look at this. Look at this. All right. So I've taken trades on this before. Let me... Can I not zoom? All right, let's have to take a screenshot. I don't know if you guys can see that. All right, right here. Oh, there we go. All right, so I had a BTC short. I paid $55 in swap fees. $55. All right, these are trades I lost, but to pay $55, hold on, and look at this. So I opened it on April 29th, and I closed it on June 6th. So what is that? That is a month and a week. So what is that? Yeah, let's just say 5 weeks. what was the position value of this? .6 BTC. I gotta do some more math. I tried this because it was cheap and someone asked me about this, so I was like, you know what, I'll try it. But just to give you an idea, for the same amount of time, why is the song popping up? This is a lot of math for me right now. You guys are gonna laugh at me and be like, what? So this is based off of... I would have to do more math and figure this out. I don't feel like it. I'll look back at it. But based off what the calculations I've been doing, even though this position's a lot less, I don't think it was that much less. I think it was maybe... Hold on. Maybe I should do the calculations now. Oh, shit. Where is it? I have so many tabs open. All right, so let's do... Why did... What the fuck just happened? Why didn't that work? Oh. So look at this. So the position value of this trade was about $1,700. All right, so $1,700 position. All right, versus all right, let's do the math again. You guys are probably laughing at me because for some reason I am overwhelming myself. All right, so that's... It was 37 days. So, for a position that was... I need another calculator. All right, so for a position that was 55% greater than this one, all right, I paid literally, was it 55? This is just averages, guys. All right, for a position that was 55% greater than this one, I paid almost 7 times the amount in funding fees. That's ridiculous. That's absolutely ridiculous. If it was like 2 or 3 times, maybe I would consider it to be worth it. But to pay fucking almost 7 times the amount in swap fees for a position that was 30% more than this one, or sorry, 55% more, it just doesn't make sense. It doesn't make sense. That's the reason why I'm so against it. If the swap fees were just a little bit more conservative, I would do it. But they're not. Doge Trade is paid for my Panda Express. LOL. Awesome, man. Awesome. My funded FX and FTMO are one of the best props. Not sure where you got that scammy prop firm from. I mean, it's still the same concept. It's the swap fees that are going to kill you. If someone can confirm the percentages that they're paying, if you can tell me that you're only paying maybe 2 to 3 times more than you would on a funding rate on Bybit, I would consider it. But it's all of them are relatively the same. Why exchanges have lower fees than traditional brokers, though, I have no idea. I wish I knew, you meant. I have no idea. Yeah, Joe got paid on that Doge position. I'm gonna get stopped out of Sol, am I? We'll see. Holy shit, I've been doing this for 2.5 hours. Alright guys, let's play some Wordle. But I'm serious though. If you guys can find me a prop firm that doesn't recharge ridiculous holding fees, I will use them. Because why not? Less rules against you. You're leveraging money. As long as you're being conservative with your risk, you can kill it. You can kill it. Oh no, BTC pump. Oh no, this is 88. Probably to be competitive. Yeah, that's probably right. You're probably right, brother. You're definitely right. Oh no, BTC pump. I think if anything, this is turning into a larger A to a B to a C. So now that we have a significant break here, unless we just come straight down, what I'm going to do is I'm considering this an A to a B to a C. So if we come back down and put in a lower low, I probably will take this as a continuation setup. I probably will. I have so many tabs open. Agree on larger ABC. Yeah, that's where I'm looking to take. I'm probably gonna take. I might take a continuation setup off of that. I don't know yet. I don't know. Just because I am a little bit more bearish, we'll have to wait and see. I will leave the smaller time frame up. I don't know why I used the double T. I told you 28K support a week ago. Well, I mean, yeah, temporary. Zero, you're not wrong. But to be honest, I think we're just gonna keep going. I could be wrong. But I still think this is still developing. Have fun, boys. See you next time, Johnny. Thank you so much, Zero. I really do appreciate it. I will look into prop firms. All right, but I can promise you I've done the same thing. That bounty is open if anyone's stopping by. If you guys can find me a prop firm with very low swap fees, and it's legit, I will give you $100, but we'll see what happens. Let's see. So let's do. How amazing would it be if it was chart? I was thinking fart too. That was pretty funny. Oh, heart. Being stupid. Heart. Shart. That's a good one, Joe. I wish it would be. I wish it would be Shart. All right, guys. We've been here for a very, very long time. I was supposed to do some stuff today, but that's not happening. So, yeah. Really do appreciate you guys for stopping by today. Hope you had a good time. I had fun. I always like watching FOMC, what happens. This be the beginning of a larger potential move. That's what I always like to say. So, and like I said, guys, I'm being 100% serious about this. If you guys can find me a prop firm with low swap fees with good rules that isn't a sham, that's legit, I will pay you a $100 bounty. But I don't think you can. But I challenge you guys, do some homework over the weekend. You never know, you can make $100. So, if you do find it, message me on Discord, and we'll figure it out from there. But yeah, I'll be here tomorrow. I'm not gonna be here as long as I was today because I'm gonna have to make up for doing that stuff. Not doing that stuff today, tomorrow. So yeah, I'll see you guys tomorrow, same time, around 1 o'clock Eastern Standard Time, 6 p.m. UK. I really do appreciate it. Joe, LA87, Umit, Zero, Druther, I want you to say it. It's been a while. Say it. You know what your job is. One Life Passion, Supreme Cat, Yash Patel, Chandra, Jack Black, Nini. There it is. Keep it between the ditches. Druther, it's good to see you, my friend. Hope to see you on more streams soon. Yeah. Thank you guys so much. Classic Druther send off. It's been a while. It's been a while since Druther sent us off like that. So let's do the thing. Sure, make sure I'm in proper staring mood or staring position. I always feel like I'm off center, man. All right, I'm gonna go right there. It's gonna be a final answer.